Hello, 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 hello. Hope you all doing well. I hope you all doing well. I'll be doing a review of the analysis we had last week on Tuesday. This is the weekly review of our analysis. So I'm going to start with the dollar index. It will just be a quick review, and I will upload a new weekly analysis, volume 2, this coming week. I'll upload it this coming week. So we have this dollar index, like we suggested it last time. We saw this price stops being taken and price broke and left this gap here, and we were expecting price to come into this imbalance and then sell off to our levels which we annotated. Guess what happened? Price did exactly that. But if you study this day here, what triggered price to buy in order for it to return to this imbalance here? You can see that it took out the sell stops below this lows here, equal lows, into this rejection block here, which is another block on the right time frame, and it just went back up, traded into the gap, then even went above it. And it reacted as we expected. So hope you engage this buy and this sell here. If you study price action very careful, why is it that we are looking to see it go down, and why did we want to see it come back into this gap here and this breaker? Price displaced down, broke structure. This displacement, which took 3 days to happen, led to a break in market structure here after liquidity was taken. And when they broke structure, this is a natural market structure break here. This is what you call natural market structure break. Price broke all the way down. What do you expect? After an expansion, you expect a retracement. Why is price retracing? They are retracing so that they can sell at premium PDRs. They want to sell price at premium PDRs. So price booked to this PDRA here, and from this PDRA it has started reacting, booking to another PDRA. What's the nearest PDRA that price is gonna book to? This sell stops here, this imbalance here. So price is moving every time from premium to discount, and then from discount to premium. If you take this high and this low, when you measure it, let's measure it. We have that high to the low there, and when you take that, as you can see, this is the equilibrium of this range high and low. That's the equilibrium there. What do you have at the equilibrium? We have this other block, we have the breaker, and price comes and trades above equilibrium. Why? It trades into premium. It's trading into premium. It's trading into premium so that they can do what? Sell at higher prices to those who are willing to buy at a higher price. And price is allowed to book in the discount PDRs. Price went all the way from discount trading into the premium there, and then now price is reacting. It is reacting nicely from the premium PDRA, and now it's trading all the way down. Price is in a sell program. From a buy program, it has entered into a sell program when it reached this area here. So DXY delivered nicely. I hope you followed it and you managed to use it to track your other assets. Then we have gold. Finally, gold took out the buy side liquidity. It took out the buy side liquidity. What's price above that high? Buy stops. We have buy stops there. So what did we expect? I annotated this imbalance here. As you can see, price could have came back and continued buying, but it didn't. Why didn't it come? They used this CD here. It was broken up. Now they are reaccumulating buy orders on it. How do we see that they are reaccumulating buy orders on it? You can see that price broke above. Let me annotate it. That's the high of the imbalance there. Let me give it this color. Let me give it the yellow color. That's the high and the low of the CD, and this is the equilibrium of the CD here. So what do we see here taking place? We see price breaking above the CD, closing above it, and it just waits on this day here. And then on this day here, price comes below the low of this day here. Isn't it a coincidence? Is it a coincidence that this low was formed at the equilibrium? What rests below that? Sell stops. And remember, our bias was bullish. Our target was this, and finally that. So price comes back, trades below there, takes out the sell stops, and it buys. It expands up, breaks structure above this highs here, and eventually trades into that level which we expected. And then on this day, it trades down into this bullish order block, and it expands nicely, taking out the buy side liquidity there, as you can see. So gold took out the buy side liquidity. Nice trade on Friday. Nice trade on Friday. Nice expansion into the buy stops. Hope you managed to take something out of these days here. Now we have the S&P. The S&P, I was expecting price to trade into this gap. That was our only target. If you refer back to the video, you will see what did it do. It eventually traded into it. It hit it nicely, finally hit the gap here, and it closed it, and it gave us a nice reaction to the downside on Friday. But our focus one was on the FVG, as I annotated here. Focus on the FVG, and it hit it nicely. The FVG was well hit, well traded into. Hope you managed to make use of it here. And we have okay, before I go further, when you look into the 1 hour, when you look into the 1 hour, I talked about the equal highs here. So price traded nicely into those highs. It took out the sell stops here on this here, took out the sell stops. Price came back, bought from it, expanded, nice entry from the order block, and then it hit this buy side liquidity. It was a nice buy trade on Thursday before this reversal on Friday. In the EU, we expected price to come back down into this imbalance, and then as the DXY was trading into the imbalance on the upside, we expected EU to trade into this. And what did we see? It traded into it, but it crashed all the way down below it. So on EU, the price went below what we expected it to go. It went all the way down to take out the sell side liquidity. Why? Because the euro was so weak on this particular day here. It was so weak while the dollar was so strong. So that allowed the EU to be drawn all the way down here while GU was being held. EG was falling, GU was held, or it was held until it was released at a later time, while EU was allowed to crash. And that's the results of what you see here. Does that abandon our trade idea? No. This happens in the market. That's why you have to risk well. So that's why you see that we didn't even take any trade on EU this week. We didn't take any trade on EU. And as you can see, we have GBP USD. We annotated our bullish breaker here and this gap here. And I explained that we're expecting it to come into this imbalance and then we have to come for this buy side liquidity. And if it is late, it can come for these ones. What did we see? It did the same thing. Nice reaction there. So we're going to cover the trade that we took on GU using this idea. I'm going to cover the trade that I took on GU using this idea. So let's go and see. Let's go and see what GU did. We took a buy trade on this day here, on a Thursday, using this idea that we are bullish on GU. So if you look into, this was the setup. This was the setup we had. I sent the signal telling that I'm buying GU here because this is the imbalance I talked about. Price traded into it and it went all the way up and closed above it and came back into the low of the imbalance there. And at that low we have this bullish order block and price went all the way up, engineered these equal highs. When you see these equal highs, just know that markets are going to revisit them at a later time. So price engineered equal highs telling me that they want to buy it. So I send the signal and price came all the way back into the order block. It hit it nicely, hit the order block. And yeah, Boris Johnson was waiting for price to come back. And eventually, when you look into what happened the coming days, I hope it came all the way to that level. And let's look into it. It hit it nicely and it bought. You can see how it went to this level. It hit this level, bought from it, and how it reacted at this level here. And then eventually how it went all the way to this level here that I annotated, sold back to this level here, and it bought from this level and came to Papa Boris Johnson's office there. Price was well delivered nicely. The target was hit. You could have took your buy trade when you saw this price breaking market structure to the upside here. When it came back into this order block and this bullish breaker, you can take your buy here. But I sent a signal saying buy when it was here. Me, I was already entered on this here. I took a buy below here. Then I sent a signal saying buy here. I hope you managed to buy and you managed to. I said you can aim for 30 or 25 pips. I hope that managed to. This was around here, 25 pips there and then 42 pips there. So you can take, you could have took something from that. You don't have to wait for it to come all the way to this level. You just need a piece of it. So GU delivered nicely, and that was the only trade we took using the analysis that we outlined at the beginning of the week. So that's all I had. That's our review. So we'll be looking forward to see the new weekly review that I will release very soon. So stay in touch and I hope you learned something from this. Let's keep winning, let's keep grinding, and I wish you all the best. I love you. Thank you so much for being part of this community that we are building. and I hope that we'll go together and we'll win together. I love you. Goodbye.